I analyze each company on GrowthShares through a filter of 3 factors: the business, the stock, and the price. Each factor is weighted differently to signify their importance as a long-term investment. The business factor accounts for 45% of the overall analysis, the stock accounts for 35%, and the price accounts for 20%. Each factor includes a number of metrics that are each weighted appropriately based on their importance to that factor. Each factor and each metric are graded from 1 to 100, with 51 being average. Most companies will fall into that average column. After everything is accounted for, they'll be added up to give us our final grade. Now let's go over each factor and each metric, and I'll describe why they're important to the analysis. The business factor looks at how good or bad the company is running its business. It's the most important part of analyzing a long-term investment. These are the 8 metrics that make up the business factor. Growth accounts for 20% of the business factor. It's calculated using a combination of growth metrics such as earnings per share. Growth tells us the projected future growth of the company's business. Business margins is based on how much output is generated for every dollar of revenue created. This tells us how well the company is taking from its market. Operations is a relative calculation based on how effective the company is doing its business. Debt utilization takes into account the short and long-term debt that is used to fuel the company's growth. Too much growth is considered a bad thing for the business. Efficiency is how well the company is using invested and reinvested capital to run its business. Employee growth is basically a measure of whether a company is hiring at a rate equal to or higher than the country's GDP growth. This shows a company is committed to a societal balance. Sustainability is a company's ESG risk rating, which measures a company's environmental, social, and governance impact. Market dominance is a measure of how close to a monopoly a company is to having. This metric is different for different sectors. Market dominance is how strong a company is in its field of business. The stock factor looks at the projected future performance of the company's stock and what others think of the company. These are the 5 metrics that make up the stock factor. Stock performance accounts for 25% of the stock factor. It's calculated using a combination of short and long-term stock performances compared with the S&P 500 and its sector to give us a growth or decline rate. Dividends are basically how much a company is paying out in dividends. That means free cash just for holding shares in the company. Technical analysis uses a combination of RSIs and moving averages to give us a technical input on price patterns. This is more so a short to medium-term outlook of a company's stock. Wall Street analysis takes into account what Wall Street thinks of the company. Other opinions matter, and they do sway the direction of a company based on their conclusions. Short interest is the percentage of traders and investors who are actively shorting the stock. This gives us a gauge of what others think of the company based on how many people want its stock price to drop. The price factor looks at only one metric, and that is its intrinsic value. Intrinsic value is the fair value price of the company's stock by using a discounted cash flow model to determine the true price of the company, while accounting for conservative projections. Adding everything up will give us our final grade. And now you have a better idea of what each factor and metric are about. If you're interested, here are some analysis videos I've made. And as always, take care of your money.